大変お待たせいたしました。
Thank you very much for waiting. Thank you very much for joining despite your very busy schedule. We would like to start NTT Data Group Corporation 2026 March third quarter financial results press conference. Let me introduce the speakers today. NTT Data Group Corporation Representative Director, President and CEO, Yutaka Sasaki. Director and Executive Vice President, CSO, Tadaoki Nishimura. Senior Vice President, Head of Finance Headquarters, Keisuke Kusakabe. The MC is from Public Relations Office. My name is Fukunaga. Nice to meet you. As for the presentation materials, we just have presentation of Q3 FY 2025 financial results. The materials are uploaded in the IR information of our official website. Please download as necessary. Now from President Sasaki, results for the 9 months ended December 31st, 2025 will be presented. President Sasaki, over to you.
I am Sasaki from NTT Data Group Corporation. Thank you very much for taking time out of a busy schedule to attend today's press conference. This is today's agenda. First, we will explain the results for the 9 months ended December 31st, 2025. Please turn to page 4. This is a summary of the results for the 9 months ended December 31st, 2025. Compared to the previous year, net sales increased by 236 billion yen. Operating profit increased by 148.2 billion yen. Profit increased by 126.5 billion yen. New orders received increased by 337.7 billion yen. Due in part to gain on transfer of data centers during Q2, both net sales and operating profit rose year-on-year company-wide. Next page, please. Concerning data center transfer gain, compared to our projection of 155.4 billion yen, the actual amount that was 129.5 billion yen, lower than our projection by 26 billion yen. We will therefore reflect the difference in our full-year forecast. Net sales will be revised down by 26 billion yen from the initial forecast to 4,910.7 billion yen. Operating profit is also revised down by 26 billion yen to 496 billion yen. Regarding profit, due to partial tax exemption on a DC transfer gain, tax expenses are lower than expected. As a result, profit is revised downward by only 6 billion yen to 260 billion yen. We will continue to explain the details of our performance on the following pages. First, for new orders received. Both Japan and overseas segments performed well, resulting in a year-on-year increase of 337.7 billion yen. The Japan segment saw a strong performance across all businesses with a 237.3 billion yen increase, primarily driven by the acquisition of large-scale projects in public and social infrastructure as well as financial business. In the overseas segment, driven by the acquisition of large-scale projects in the data center business of Global Technology and Solutions Services, hereinafter referred to as GTSS, new orders received increased by 109.5 billion yen. Next, net sales. Net sales increased overall by 236 billion yen year-on-year. The Japan segment saw net sales growth in all businesses, resulting in a segment-wide increase of 77.1 billion yen. In the overseas segment, while APAC experienced a decrease in net sales, this was offset by DC's transfer gain in Q2, as well as steady expansion in the data center business, resulting in an overall increase of 180 billion yen in the overseas segment. Next, operating profit. Operating profit increased overall by 148.2 billion yen year-on-year. The Japan segment saw a decrease in public and social infrastructure, but increased operating profit in the financial and enterprise business, resulting in an overall segment increase of 4.6 billion yen. In the overseas segment, due to higher operating profit from higher net sales and cost control efforts, including a DC transfer gain in Q2, the segment as a whole recorded an increase in profit of 158.3 billion yen. I will explain in more detail about our Japan segment as well as overseas segments. Japan segment. In financial enterprise businesses, all items, new orders received, net sales, and operating profit increased year-on-year. In public and social infrastructure, there was an increase in net sales and decrease in operating profit. The reason for the operating profit decline was an increase in losses from unprofitable projects year-on-year, combined with the absence of highly profitable projects in central government and related agencies booked in the previous year. We will strive to achieve our performance forecast for Japan overall. I will now explain about the performance breakdown of overseas segment. In North America, although there was a year-on-year decline in new orders received due to lower demand for large-scale projects than the previous year, sales from large-scale projects already ordered contributed to an increase in net sales and operating profit, excluding exchange rate effects. In EMEA, although a downturn in Germany, etc., is continuing since last fiscal year, strong performance in Latin and Spain, Central America, Spain, etc., coupled with a recovery trend in the UK, resulted in increased net sales and operating profit for EMEA as a whole.
In APAC, communication device sales are sluggish, but cloud and security business is growing. Decrease in net sales, but increase in profit on constant currency basis. In GTSS, in addition to the DC transfer gain impact, there was one-off revenues such as incentives associated with DC sales in Q1 and Q3. Overall, it is on the recovery trend, and I will talk about the change from the last fiscal year from the next slide and onward. This shows the regional portfolio as of Q3 in the year ending March 2026 and the recent quarterly profit margin. The pie chart below the middle shows the breakdown of net sales. Japan accounts for 40% of the total, whereas overseas is 60%. In overseas, in IT business by region, North America, EMEA, and APAC are covered. In GTSS data center business, portfolio is structured globally. Next, in terms of profit margin, as you can see by the line graph by region, North America is improving its profit margin in Q3 this fiscal year. Although it includes one-off factors, even excluding that, it shows recovery trend. EMEA is also gradually recovering, as you can see. By country, UK is improving. Germany is taking various measures under the new organizational structure from October. APAC's profit margin worsened in Q3 and Q4 last fiscal year, but now beginning to see the signs of main cause of this, the unprofitable business coming under control. We will continue our efforts to improve the profit by maintaining and accelerating this pace. Next page shows the progress in business transformation of overseas segments. Until last fiscal year, we implemented mainly corporate functions and office integration, but starting from this fiscal year, we are committed to enhance business process and optimize business operation to enhance our global competitiveness. As business integration cost, we spent 15 billion yen up to Q3, promoting mainly ERP integration and corporate function optimization. From here, let me explain the status of data center business. Our investment progressed steadily, totaling $1.687 billion for the 9 months ended December 31st, 2025. Also during Q3, we launched new service in Thailand and India. Another data center has been completed in Kyoto. In terms of operating results, as we explained in GTSS performance, even excluding DC transfer gain, DC business is steadily expanding. Let me turn to focus areas for quality growth. As we indicated at the financial results meeting in November 2025, by placing AI-powered new value and productivity and next-gen infrastructure as taglines, and we will promote new value delivery using AI agents that respond to industry-specific business challenges and regulations. To push ahead with this value delivery structure swiftly and globally, we are strengthening ecosystem formation with our partners. The other day, we have announced conclusion of global alliance with AWS to promote cloud migration and use of AI agents. Going forward, by leveraging partner alliance, we will aim to achieve quality growth through value delivery by AI and next-generation infrastructure. Next, let me talk about the establishment of new AI company, NTT Data AI Vista in Silicon Valley. As mentioned, the keys to deliver values as AI-empowered new value and productivity will not be the AI technology per se, but to implement AI aligning to customers' proprietary data and business industry characteristics, the last mile leading to business results. NTT Data AI Vista was established to enhance the implementation capacity of this last mile, and Bratin Saha was inaugurated as the CEO. He has experience of leading business growth in areas of AI and machine learning at globally renowned technology companies such as NVIDIA and AWS. He is a person who can drive both on global scale from both technology and business perspectives. The achievement of the target of 200 billion yen in net sales in AI agent-related business, 300 billion yen, FY 2027 will be led by NTT Data AI Vista. That concludes my presentation. Thank you.